Hello Wolfpack, little market update here. We've had a small short-term breakout of some resistance on the 4-hourly chart. I'm just going to keep this video quite brief because nothing really, too significant has happened yet. It's still developing, and the move for sure is still developing 100%, as I just said. But we had this quick little break of the 4-hour resistance. We've closed a 4-hour candle above on a shorter term scale. Some would perceive this as a descending wedge formation, in which we will be moving to the upside. Now, the reason why I'm not super convinced by this breakout, and the reason why I don't think this breakout is going to actually materialize into anything too major, is because all we need to do is take a measured move from the bottom of this breakout to the top of this breakout and apply it to the breakout point. And you can see that this breakout will take us pretty much to the doorstep of the yellow line. What is the yellow line? The yellow line is our critical uptrending level of resistance and previously support that I have said multiple times, in the past, and also speaking to Mega Whale yesterday, that we need to break in order to have any chance of actual bullish confirmation. The breakout of this short-term descending wedge formation that we've just had on the 4-hourly chart in a measured move will take us to the doorstep of the point in which we need to get to. As you can see as well, it would also take us to within the bull market support band. So not only will we be facing strong resistance from 53k, strong resistance from the bull market support band, but we will also be facing strong resistance from the previous uptrending level of support, which I've got as yellow there, when taking into account what the measured move would be from that breakout. So the point is, the breakout, from what we're seeing on a technical analysis standpoint, probably won't have the steam to take us higher than where we need to go, which right now is at around 54.5k. Now, that's where we need to go, and that's increasing every day. So this breakout probably doesn't have the steam to take us there. Now, there are some factors as well that you need to consider on the bullish argument, right? There are many bullish argument factors. And guys, by the way, remember that, I have said previously that if we're going to bounce in a healthy fashion, needs to be here, needs to be above this green box, right? If we're going to bounce, this is very much for last resort for Bitcoin to have a bounce that has at least a slim chance at a full recovery, right? Because if we go down to here, we go down to this green box, which is not very far away, go down to 43k, the obvious pattern would be a massive head and shoulders formation, right? If we bottom out here, as opposed to down here at 43k, we're actually holding this downtrending level of support for support, as you can see, and we can see a higher low pattern rather than a head and shoulders pattern. So look, we need to be bouncing here. The bullish argument relies on a bounce here, 100%. Let's pull up some indicators here that would suggest that bounce might actually take us higher. Well, one of the indicators, just off the bat, is descending volume generally on the whole entire downwards move. When you see descending volume on a downwards move, it basically means that you're running out of selling pressure, and when you see low volatility, that's usually when you see the biggest move, right? You can see here, for example, which is a great example, throughout the whole of May through to July, we had high volatility, and we had, it was chop, but it was very spiky chop, okay? And that's what chop is, high volatility, up, down, but it basically gets you nowhere. And notice when the volume actually dropped off and when the volume flatlined, that's when we saw a move, right? The volume is starting to flatline a little bit. My problem is, not whether we'll see a move or not, I think we will, but my problem is I don't think this move's going to actually get us above this uptrend level support, and even if it does, I would be skeptical as to whether it will get us above 61k, because as you will remember, 61k is my ultimate conservative buyback zone, right? 54.5k currently, above the bull market support, and above the yellow uptrend level support is my, buying back range for an aggressive investor. I think that we will most likely go up from that point, but I wouldn't be 100% certain of it yet, right? The fact of the matter is this drop has knocked a lot out of the market, right? A lot of structure is broken here. We're currently basically relying on pretty much the last long-term support line we have, this downtrending support line. This is the last zone we have. If we don't hold this, we're definitely going down to the 200-week SMA for sure. So that's the critical thing we need to be doing for Bitcoin. If we bring up some other indicators, let's take away the volume. For example, we can bring up the VVPR. The VVPR is showing that we've actually bounced off of the POC, the point of control, which is the highest place of historical volume, the VVPR, which means the most buying, the most support is coming from the area when you're above it, and when you're below it, the most resistance is coming from an area. We are still, however, within a massive hill, that I like to say, a hill or a mountain on the VVPR, in which there's a lot of buying and selling contention in this area. Once we break above say 53k, that's the next logical target. Okay, so if we can break above this triangle region, and specifically break above this line, which I'm going to make yellow right now, this line here. Right, there's a lot of lines here, so it's quite confusing. But if we can break above that line, we can see that we would have broken above some sort of long-term descending wedge formation, which is typically a bullish pattern. We could break above that yellow line, which currently would put us at about 50k. It's basically clear sailing until 53k, and then from 53k we face the resistance from the uptrending level of support that I've listed as critical. So there is a ways to go, and this small rally is nothing to get out of bed for at all. So you know, we've got a long way to go. Let's look at the 50-week SMA, 50-day SMA, sorry, the 200-day SMA, and also the 200-day EMA. And we can see that currently, even though it hasn't actually closed yet, we are above both the 200 both of the 200 SMAs and EMAs. And so if we do close this candle above, say 47.8k, that would put us in a position to have flipped those zones for support and to start kind of doing a little cup formation here and coming up for a bounce. Whether that's a dead cat bounce or not is up for speculation in the future. I think it will be a dead cat, but we'll see. If we break that uptrending level of support, that would be an indication that it's actually going to be a full recovery. An early indication, but an indication nevertheless. So we are flipping those two things. If we come back down, we close below 47.8k. That's basically meaning that this whole move was a big fake out, which is very, very possible, right? We've seen fake outs multiple times in the past. And ultimately, we've only actually broken through short-term resistance so far, right, on this move. We haven't actually broken into anything major quite yet. Now, the last thing I want to bring up is the RSI. The RSI is in a very interesting position. This is something that I'm looking at very, very closely because the RSI, particularly in 2021, has acted as a critical indicator for bulls and bears to determine whether we're going to see a massive breakout or whether we're going to see continued downwards trending. Now, we can see the RSI is in a strong downwards trend. Okay, we have a strong resistance line on the RSI that we are testing right now. What has happened historically when we break those resistance lines? Well, we can see we had one forming all the way from January through to about July here. When we broke it to the upside, we saw that rally from 29k all the way up to 52k. We had one in September as well. Okay, there's multiple ways to draw this, but I'll draw it like that. And when we broke that to the upside, we broke up from around 40k to around 68k, right? And we're currently seeing it right now. Now, we could reject further, right? You can see how long these rejections lasted in 2021, in early this year. But if we do break out now, it would be a sign that we would be seeing a rally. Now, you know, the only problem is, where would that rally take us? I mean, we have closed a weekly candle below the 50-week SMA, and that's what we need to look at right now as well. So let's bring that up. You know, where would that rally actually take us? We do have a larger bearish divergence on the weekly chart. There's lots of things to be looking at here. There's lots of conflicting data. Now, what I will say, though, is that if we can manage to somehow come back above here, you'll notice that most of my analysis, if you watch my channel, has been based off the 50-week SMA in the recent couple of weeks, right? That is because the 50-week SMA is basically the number one teller as to whether Bitcoin is in a bear market or a bull market, or going to be entering a bear market or a bull market. Every time we close below the 50-week SMA convincingly, we enter a bear market, and we end up bottoming out on the 200-week SMA within about a year. In this case, right, if we continue to close below it, in about a year's time, so say November next year, the 200-week SMA will probably be at around 25k to 30k, right? So that would be the next logical step. Now, the thing is, though, there have been occurrences, it's rare, but there have been occurrences in history where we have actually closed below it briefly, like we did in July, and then on the next candle came back above it and resumed the upwards trend. So the close wasn't convincing enough. Now, this could potentially be the case on this candle. If we see a strong green bullish engulfing weekly candle here, it could be the case that we're actually seeing the bounce off the 50-week SMA as expected. However, even if we do bounce off the 50-week SMA, it would beg the question, are we just seeing a regular bounce, a dead cat bounce, or are we seeing a bull market recovery? Because historically, we usually top out, we come down, we bounce off the 50-week, and then we see a drop, right? It happened in 2013 as well. Right now, we haven't seen that bounce off the 50-week after the all-time high, right? We made an all-time high, and right now we're just expecting to drop straight through. But we could very well see, as I've been saying previously, the bounce off the 50-week before the drop through, and that would be a macro head and shoulders pattern as well. Now, you know, in order to kind of summarize this video, there's been some slight progress, but it's simply not enough to justify any sort of investment for me personally right now. I'm still sitting on the sidelines until 54k, 54.5k currently. It will move up as the time goes on, right? And 61k would be my full conservative buyback zone where I'm 100% confident the market's going to go up. But 54k, I'll be willing to take some bets, right? But, you know, essentially, you know, don't get too bullish because nothing too major has happened yet. There has been some slight progress, but hey, look, there was some slight progress. Let's go back to the daily chart. There has been some slight progress, but at the end of the day, there was some slight progress here, right? On this pump we had back in June, right? We pumped up from 30k all the way up to 41k. Okay, and people probably thought the bull market was resuming. That's the bottom. We had a little cup formation forming. We end up just rejecting and going further down, okay? I'm not saying that's going to happen again. I'm saying it's very possible because we haven't seen the confirmation we need to be seeing in order to head upwards. The first step, the very first step, would be breaking that RSI resistance, closing it to the upside, and closing above the 200-day SMAs and EMAs. So look, RSI resistance, let's bring up all this stuff here. This is the daily chart. And we'll bring up the RSI. Hold on one second. This RSI resistance, if we close above it, that would be a great sign that the recovery perhaps is starting. Still very preliminary, still very early, but it would be a sign. So we're waiting for daily candle close, waiting to see what happens there. And we'll come back with a video tomorrow analyzing the state of the market. Thanks for watching, guys. Hope you enjoyed, and I'll catch you in the next one.